Good morning, everybody. I hope you all had a wonderful week, and what a Thanksgiving holiday season that was. You know what? I think we got a great discussion lineup today, because not only are we going to talk about what the hell's going on with the macro position of Bitcoin, but we also have an incredible guest in the house. So we're going to be breaking down some really important considerations about securing your future. So let's get into it. I want to see everybody right now. It's a class session. So everybody roll call. Get involved. I want to see those emojis. I want to see those ones. I want to see something you're grateful for. So shout out to everybody that's here. We're going to be getting started here in about 33 seconds. What's up, everybody? Good morning, good afternoon, good night. Welcome to the BitLab Academy. We got a new friend in the house today, Mr. Dr. Adam Lowe from Arculus. But before we get into that, we got some things we want to discuss here. One is we just came through, what is it, Thanksgiving? Whether you're American or you're somewhere else on the other side of the pond, it's a good reminder for everybody. Every day we should be finding things that we are thankful for, because if we're operating from a place of anxiety and need, then we're going to be looking at fear, and we're not going to be navigating our life in the best way possible. The same thing is true when you're investing in any asset or trading. If you're coming from fear or greed or FOMO, which is fear of missing out, if you're not operating from a place of power, which is gratitude and strength, you are going to be eaten alive, because these markets are a battlefield. And one of the biggest things, one of the biggest drawbacks in this entire market is ourselves. And that's why sometimes I know in my own case, one of the best ways I've protected myself from myself is actually understanding what cold storage is and getting it out of my own hands so I don't trade that shit away. So I want to shout out everybody. Let me go ahead and introduce Dr. Adam Lowe, make sure his mic is on. And I want to just get y'all's thoughts. Before we do that, hit that like button, hit that subscribe button, ding the bell. We're going to be diving into this. So coming over here, let me get your mic on. Everybody, let me know. Dr. Adam Lowe, how you doing? How you feeling? Everybody let me know if you can hear his mic okay.
Great. Absolutely happy to be here on this lovely, slightly chilly Georgia morning. It's great. Talk about some Bitcoin, talk about how to stay safe, keep those assets in your hands and those diamond hands.
So if you're okay with it, slide on into me. Let's be shoulder to shoulder. We're going to be partners in crime here. So one of the things I want to talk about, everybody in the chat, let me know if you could hear and see everything okay with us two fine, strong, jawlined individuals here on the camera. But you know, the question here is, we've seen a seismic shift in the market over the last couple of years. And if we come over here to this screen right here, multiple screens, where's my, there we go. This screen right here, on-chain data chart. Now this, some people may not think this has anything to do with storage, but I think this tells a story. And I'm curious your thoughts on this chart here. This is the exchange net position change chart. And I want to know, what's your thoughts on the story that we had in this period right here, where we had not only the Chinese mining ban, then the market started breaking down, but then this downward pressure on price, and we're not talking about price here, but the market dynamics ended up leading to cascading failures throughout the space that really highlighted the absolute necessity for not your keys, not your crypto. We can see this highlighted with this large exchange net outflows culminating here with the FTX collapse with this huge outflow. So looking at a chart like this and understanding where we're going into the future, do you think that there's been a seismic shift that's going to be carried forward with this idea, all this, or do you think this is going to be, the market's going to have a short memory and people are going to get in this situation again?
No, I don't think so. I mean, if you look at the trends, right, over, I think it's 85% of ETH as an example is on self-custody wallets now. You can look at the graph you just showed and see the massive outflows of crypto into self-custody wallets. I think it's here to stay. People understand that if it's not your keys, it's not your crypto. And, you might trade on exchanges during the day, take it back, keep it in safe custody, basically keep the things on exchange that you want to trade, and everything else should be safe in your pocket cold storage. And I don't think that's going to change. You have the CEO of Kraken saying that, if you're not actively trading, it should be in your wallet and self-custody. And I think it's going to.
Well, I think the thing that I have trouble is me having been in the space for what I feel like is, we were talking about this earlier this morning. Every week in crypto feels like a year, especially if you're in the bull market. It doesn't feel as long. The bear market feels definitely longer. The bull market feels like it goes by in a blink. But once you've been through one full cycle, it feels like forever. And you've been in all the way since back in pre-2015, 13 period. So it feels to me like the world is waking up. It feels to me like it's. My mic is off. My apologies there. I should be able to hear it there. Sorry about that, JP. We have a new setup today with the guest in house. But we're having, with all this, as much as it's grown in the time I've been here, it's hard for me to reconcile how many more people are going to be coming into the market and into this next cycle or two. So being, at Arculus with y'all's, metrics that you're looking at for your own growth of your own business, what sort of things have you seen that maybe us, influencers, people on camera, other analysts, is there any sort of data or metrics that you're looking at that is highlighting, any sort of projection into this next cycle, or where you feel like just broadly, not the price, but broadly where the market is going over the next, 2 to 5 years?
Yeah, so we look at a number of metrics. If you look at both domestically and internationally, you can see a strong adoption and a strong desire by consumers for digital assets that really, I think, is positive for the space. So whether you're talking about Bitcoin or whether you're talking about your other favorite digital asset, you can see increased interest and increased adoption. So I just got back from Asia and the Singapore FinTech Festival, and it was amazing. It was amazing to see real use cases. It was amazing to see real adoption and just real favor for the space. So it was really great.
So you've been in the payments game and products as well for a long time. And, as smart as you are, having been a coder, having been a product developer and, knowing things more technically, would you say that over the last 6 years, things have gotten sufficiently convenient enough for the retail masses? The reason I bring that up is because I know when the first time I really got into crypto, it was very difficult to really navigate all the pass keys and this. I felt like if you ever saw Independence Day with Will Smith years ago, where they're hacking I felt like that, just trying to send a measly $35 worth of Bitcoin from one wallet address to another. And as time's gone on, one of the things I love about Arculus is the fact that you guys have. Seriously, look at how sick this is. These cards. This is a hard wallet. So this is, in my mind, one of those steps in that direction of being able to navigate the space, navigate your finances, and do it in a way that's secure and makes sense on a broader level. Is that one of the reasons why you went this route? Could you talk a little bit about that?
Yeah, absolutely. So, our parent company makes millions of payment cards. You probably have them in your wallet, right? So that's the same type of card as an American Express Platinum cards, Morgan cards. Our parent company makes almost every metal payment card in the world. And, we really founded the company and focused on safety, simplicity, and security, because if it's not simple, people won't use it. But it doesn't have to be complex. So we really built that product so that everybody could stay safe and secure. Because we've really progressed, but I think there's still some room to go on making it just absolutely foolproof for anybody to use on a day-to-day basis.
Well, I'm going to ask you a question that this would be something that my mother would ask, she's so hyper security conscious that it blows me away. I lived in New York for 15 years, and I don't think there was a time that I talked to her on the phone that she didn't ask me if I had changed my practices of starting to put my wallet in my front pocket so I didn't get pickpocketed. I know when people see things like this, convenience usually means higher security risk. So what is different about this that prevents that security risk? If I lose this, because I go out to, I DJ'd for 15 years. If I can go into a party, or if I'm, anywhere, if I lose this, how can this still be safe?
Sure. So there's 3 factors of security that keep you safe. First, has the same chip in it that's in the U.S. passport. So the same security level of that hardware that secures the U.S. passport secures your private keys. Also, there's 3FA. There's something you have, so this specific card, something you know, which is the PIN that protects your card, and something that you are, which is the biometric on your device. You have 3 independent layers of defense that keeps you safe. I could hand you my phone. I could hand you my card. Doesn't matter. I don't have my biometric. I don't know my PIN. Funds are totally safe.
So if you're, so say we're in some sort of weird love triangle, right? And you come in while I'm sleeping and you try to scan my face because this was a whole plan the entire time. I guess it's not possible because they don't have the PIN.
Exactly.
Unless, like on Seinfeld, unless it's Bosco. Right? That's a deep cut there if you don't know about that. So I wanted to, I think it's important right now, before we go into an incredibly, I'm talking, one of the most exciting periods in Bitcoin's history is post-halving. And regardless of what happens with that, as all of us endeavor into this, I mean, it's still a very nascent space, but we have to make sure that we're not only building strategies into our investing and trading, trading strategies as we're in the chart, in the exchanges, but also when we're taking those profits, what we're doing with it and how we can make sure that we are, as it says in the title of this video, securing your future. Because securing your future isn't just trading an asset and you see on the exchange at one point, you take a screenshot, you're up $1 million, but then in 3 weeks, because you didn't take profit or you took profit into an exchange wallet, like an exchange held thing without your keys, and you see something like FTX or BlockFi or Voyager go down and you lose access to your capital, then you may have done something very well in your investment decision, your trading strategy. But if you don't have a security strategy, then it's the same thing like the 3FA. If you don't 3FA your future with strategy, tools, and security, then you're not going to be able to have a future. So what's your thoughts with this? And with wallets, convenience, security, and strategy, is there an easy way for the mom and pop, like you, me, my neighbor, to actually onboard currency in terms of, because a lot of people think about that hurdle of getting cash you have into the market. So is there a secure way that you recommend to do that?
Yeah, so inside Arculus, we actually give consumers choice. So one of the most important things that when we built it, and important to me personally, is giving people choice and not forcing them down a path. So inside there, if you want to use a card, it's as simple as putting in your card. You can on-ramp from cash into Bitcoin, or a little bit lower fee. You want to push it, say ACH from your bank account, you can do that as well. Arculus gives you choice and shows you which is your rate. So it asks a whole bunch of people, hey, someone buy Bitcoin, let's sell it to them, and we the biggest rate, the best rate, and we take no fees on it. So whoever gives you the best price is yours.
So there's something you mentioned there that ties into the broader market, and I think this would be interesting sort of thought experiment or me pulling this sort of thought out of you, because in talking to you briefly this morning, I could tell that you are incredibly attuned to what's going on, not only in Bitcoin and Ethereum and all the, but the markets, all these things are tied together. And so we're talking about fees, we're talking about onboarding capital, exchanging different type of, so this speaks to the fact that these assets are a product in themselves. And I think we forget, would you say that the US dollar is a product in itself?
Yeah, absolutely. I mean, the dollar is heavily traded, heavily utilized. It is the main exchange currency around the world. And by digitizing the dollar with things like USDC or pick your favorite stablecoin, we are promoting the US dollar. We are promoting our economy. I think that's just incredibly important and something to not forget, that the US dollar is a product, and we should want everybody in the world that product.
So would you say a very easy thing that doesn't change anything whatsoever in the wheelhouse of what we're doing with the US dollar? Would you say that this is a very easy potential layup that Gary Gensler and the SEC could take if they wanted to, the government as a whole, to support this sort of digitizing of a product that we already have, which is the dollar?
Yeah, I think that Congress is pushing to make stablecoins more accessible and clear. You never know what Congress is going to do. It does look like some legislation maybe going through that would clarify what a stablecoin is, what the requirements are. They're not going to let algorithmic stablecoins be a thing. And then with that regulatory clarity, it will be trade and use.
Yeah, it's hard for me, again, that word reconcile. It's where we're at. I feel like so much has evolved in this space, and I know that there's still an immense amount of growth to happen, and it's going to happen very quickly over the next 5 years. So what would you say to anybody that's getting involved in this space now, whether it be them or they're talking to a friend or mother or neighbor, as a couple important considerations coming into this market, whether it be strategy, advice, or mechanisms or resources that they can utilize to help make sure that they can secure their future in the most meaningful way?
Sure. I'd say the first is it's not too late, right? We drill down and, I missed that $2,000. Oh, it went up, it went down. It's not too late. There's still a lot of room in digital assets to secure your future, be safe, be self-sovereign, really help you and your family. I'd say the second is, and this is general, I guess, investing best practices, dollar cost average. I know you guys talk about that, but it's not all today. It's not all tomorrow. Try to spread that risk across a price range and find something that.
You know what? That feels so boring.
Yeah, sorry.
No, I was going to say that feels so boring. But if we look at somebody like Warren Buffett, who in some ways is, come out somewhat against Bitcoin, but that's a whole nother argument to have. But you look at, he became one of the richest men, and I think for a period of time was the richest man in the world from having that careful, calculated, and DCA over time. Pick things you're interested in. Due diligence, so you're also investing in things you know, and it's spreading that risk. Because I know every one of you out there, and I know you've probably done it too, and I've done it too. I've bought something excited for it to go up, only for it to immediately go down. And then we have this victimized mentality where when I buy, it goes down, or when I sell, it goes up. Well, this DCA strategy actually is a huge mechanism to prevent you from being a victim of yourself. Because you can buy, if you're buying every week on a Monday, or even if you're just spreading it out over a period of time, not on a fixed schedule, it doesn't matter if the price oscillates and goes down right after, because you may be buying again in a week and you take advantage of that price. So you're mitigating your victimhood, really, but you're also getting advantage of taking the best average price over time. Because look at, for instance, Michael Saylor. Do you think that what Michael Saylor has done in the last 2 years has been a smart investment plan with the billions of dollars he has? I mean, because he's bought at the top, he's also bought in the middle, and he's also bought at the bottom. So people will call him a fool for that. What would you say?
Yeah, I would say that nobody knows, especially on a relatively volatile asset, what it's going to do. So I think he's allocating capital where it makes sense. The other thing to look at over that period is there's huge differences in interest rates. So his cost of capital difference there is very big, right? So everybody on your channel, I'm sure, appreciates when interest rates are effectively zero, that's a very different ball game than when interest rates are effectively 5%. So, you have to look at your hurdle rate and decide where you should deploy your capital.
Yeah. So before we go, because I know we're going to have to get to a couple of other things, is there anything else that's sort of on your mind about the market? Anything over this next, maybe going into the holiday season or pre-ETFs, if those come? What would you say to people, maybe as a little bit of an edge, some of the things, not assets, but tools, resources, or broader signals that you're looking at, giving you ideas about where the market may be headed?
Sure. So what I think about is, it's easy to forget because it's a little technical, is liquidity brings value. Right? Interoperability brings value. So look at those assets, look at those places that are going to be more interoperable with each other, are going to be able to access that global pool of traditional capital because it's more liquid, it'll have more value. And those chains that have that vision to be able to connect with the real world, because a lot of times we kind of hide in crypto land. It shouldn't be them or us, it's and. Blockchain's all about faster, cheaper, better. So, those chains and those assets are ones that I think are going to rise in value.
Infrastructure plays, everybody. The piping of the digital future is blockchain. So what are you getting exposure to? Make sure it's broad, make sure it's diverse, and make sure you secure it. Because I think Arculus, you natively support quite a few different chains to be held on there, right?
Yeah, absolutely. It's like 90-something% of the market cap. The product can sign for just about anything. But yeah, we had some of the first and most diverse holdings of any hardware wallet. Things from HBAR to ETH, all your favorite EVMs, Bitcoin, of course, Cardano, Polkadot, all sorts of things. And even, we try to make it easy for people, as we discussed. But, let's say you're a big MetaMask fan. Arculus can even sign for MetaMask. So instead of keeping your keys in the browser, you got your keys in your hand, and you're working in MetaMask on your favorite DEX.
Well, Dr. Adam Lowe, I appreciate you being here. Everybody, I'm scrolling through right here on getarculus.com. I think some of the mods have dropped the link in the live chat there. So definitely check it out. Make sure, even if you have a ledger or an Elipal or a Trezor. It doesn't matter. Just like I diversify the coins that I hold, I diversify the types of wallets and systems that I have as well, because you never know. You never know what legislation comes down for different and how different organizations or companies try to either integrate that legislation or fight against it. So you have to be very safe and smart about how you're diversifying where you're putting your capital, because much like decentralized nature of blockchain, why centralize all your assets in exactly only one place? Make sure that you diversify and secure your future with some security here. So I know we're going to be talking to you a little bit more and discover crypto as well. So I'm going to hop out here and jump into some charts that I know everybody wants to see. Do you like on-chain data? Do you look at on-chain?
I do look at on-chain data all the time.
Yeah. Let's see. I don't know if I could pull it up on here. But you were talking about global liquidity, or you're talking actually about the liquidity between different assets. But this is a chart I've been watching very closely for the last, since this point right here, especially with this sharp decline in global liquidity. We had this huge bullish divergence right here after the FTX collapse, front running this, huge impulse that we saw in Bitcoin. And then we've seen this large decline broadly here, which was interesting that we still saw Bitcoin on what's the word I'm looking, on average rise in this trend. And then in this case right here, we're starting to see a huge uptick in liquidity again. I'm just wondering if we're going to get another rejection here, because with all the global macro data that I'm looking at, feels like I need to adjust some of it, because it feels like it's sculpted to be doom and gloom, because everything I'm seeing is, credit card debt over $1 trillion, defaults, at record levels, retail savings basically near zero. But then we see, like we just saw from Bar Chart posted, a record online retail sales for Black Friday. So over $9.8 billion or something at the early numbers coming out. Where is this capital coming from for people to spend if credit cards are exhausted and there's no savings? And is that potentially any sort of signal that, what did I call it on Twitter? I called it, is this a risk? Is this a risk? What did I say? Right here. Not sure where the capital is coming from, but is this a sign of a non-care for risk spending going into the holiday season? Like, do you think, despite the pressure we're seeing with all things equal, do you think there's going to, minus the Bitcoin spot ETF, do you think that there's capital to actually drive the markets right now?
Yeah, I do think there's capital. Like people do keep some dry powder. It also depends on exactly which market segment you're talking about. But I do think there's some dry powder. Some of that holiday spend, if you look, was BNPL. So that kind of new category of buy now, pay later. I think it hit record numbers for the first time. So that's where some of that capital's coming from.
Is that the new technical term for layaway?
Yeah, it is. It is. It's the sexy digital term for layaway. Klarna, I don't think, likes layaway. Yeah. But anyway, and we have to remember a lot of the dry powder is also coming from international sources. We talked about this briefly, right? So if you look at Hong Kong, if you look at Asia, if you look at some in Europe, dissatisfaction with kind of their current economic systems, they're seeking alternative assets. I think you can see a lot of opportunity and a lot of capital coming from Asia and other markets.
Yeah, and this is, I don't know if you've ever seen this. This is from TechDev, brilliant guy. He kind of argues this idea of whether or not it's the halving or the Chinese 10-year and basically the credit cycles and liquidity cycles. And I think the argument that it is the halving or it is liquidity, I think is a little bit arbitrary, because in reality, I think they're probably very closely tied together. And also thinking about how the halving is programmed and the schedule that it's on, I can't imagine how brilliantly Bitcoin was programmed that they didn't take into account liquidity cycles for the markets, at least for the time being. So have you? I think this speaks to what you're just talking about with increased liquidity spurning the starts of these very massive uptrends in the market. So I think we got a lot to ride on.
Yeah, absolutely. I think the data correlates well, and I haven't seen this before, but this is extremely well laid out.
Yeah, TechDev _52. I'll share his info with you. He's excellent analyst. Another thing, before we go, actually, I think everybody, you're getting the benefit of talking to one of the brightest minds in the crypto space. So we're going to do a member stream later on today as well, where we're going to go through all the other charts the technical stuff, the price action, all that kind of stuff. But we got to make use of Dr. Adam Lowe here, because looking at this Chinese 10-year here, the Dixie and all, basically the liquidity signal, this also alludes to a question or a thought that you brought up about, Singapore, Hong Kong, China. There's so much liquidity. I don't want to call it trapped, but stagnating and suppressed there, especially with what's happened with the Chinese mining ban. And then we're also seeing a shift from that, back when the market's quite low, where they actually look like they're kind of working to build an infrastructure and incentivize the use of crypto. Have you heard, because I've heard from other people about this sort of Chinese stablecoin that they're potentially going to be pushing out, which in some ways might seem nonsensical or doesn't matter to us if we're here in the US or in Europe. But just like BRICS, an attempt to organize and move away from world trade being pegged to the US dollar, I can't imagine that China would not, even if they initially were opposed to blockchain, I cannot imagine in the global financial trade war, which is what I think World War III really is, I cannot imagine that China would not want to step into the fold and have something like a Chinese stablecoin to help prevent this next evolution in finance from being pegged to the US dollar. Have you seen or heard anything on that? Or like, how do you think that would affect the markets?
Yeah, I think it would be interesting. You would probably see some liquidity shift. I've heard some rumblings of a stable coin in terms of digital yuan, but the Chinese government hasn't been too keen on working with that. They have talked a lot about CBDC. I fully expect there to be a Chinese state-backed central bank digital currency. I don't know how much it'll hit retail, but I do think that they will promote it just because they can control it, right? There'll be a lot of technical contract functions that will allow them to things to promote it or pull it back or otherwise control the currency population. So I do strongly think you'll see a Chinese CBDC that will in some ways be pitted against a free US-backed stablecoin on public permissionless blockchains.
So the other thing that I hadn't even considered, and you're in this business, payments, security, forging and helping everybody, much like the logo you all have with Arculus, forging into the future and doing it in a secure way. Being able to be self-deterministic is I think the word that you used, and is beautiful. Is this type of business model, this is something I'm completely unaware of. Is this something like, would the East, and especially like areas like China, would they even allow something like cold storage?
I'm not an expert on their law, certainly, but I don't think they would be a fan. If you look at Hong Kong, it's kind of rubber banded on whether retail exchanges have been allowed, and then they weren't allowed, and now they're allowed again in very specific regulated environments. So I would say overall, no. I think they would prefer you on a centralized platform versus self-custody. I'm saying it's not allowed, it's certainly there. And China is a very unique market. You can't lump Asia into a single market. Right. Singapore and Japan and other Asian markets are drastically different than the Chinese market, right? That's its own.
Japan is very crypto forward.
Yeah, absolutely. There's a ton of SoftBank money, lots of investments, lots of Web3 specific investments. I'm very excited to see what Web3 and crypto does, and Singapore.
Yeah, I can't imagine, I can't even fathom what's coming in the next 5 years with how fast it's moved just in the development. And to us, it feels like it's moving at a snail's pace. But we all know, I've gotten to the point now, if there's a project that needs to be done, it's kind of like when we're kids. You get a teacher you don't like, you're like, oh, I have 6 weeks with her, it's forever. Now, if I have a project that needs to be done in 3 to 6 months, I'm like, that's not enough time. Because but then also, we're trying to plan into the future in the face of changing technology at the same time. It's a very almost like multi-universe sort of approach that we have to take and all this sort of stuff. So I've loved having you on. We're gonna have to talk more about this. I'd love to have a sit down with you actually when we do like a 60-minute style full interview where we got it framed better and we can ask you some more meaningful questions. But everybody, throw one in chat for Dr. Adam Lowe. Where else can they find you in terms of Arculus? And do you have a Twitter that they can follow you on?
Sure. So all of our socials are at This Is Arculus. So pick your favorite platform. And then if you have business stuff and you want to get in touch with me, I'm easy to find on LinkedIn, Adam J. Lowe.
At This Is Arculus right here. Come give them a follow. We're going to be doing a lot of giveaways, really trying to help incentivize you guys to get involved with securing your future and doing it in a way that is easy, convenient, and secure. So with that being said, Dr. Adam Lowe, I appreciate having you on. I look forward to talking to you more. And everybody, throw a one in chat for security, for self-determination, for freedom, for financial sovereignty. That's all I got for you in today's episode. We had to take advantage of Dr. Adam Lowe being here in the studio. We're going to be doing another stream this afternoon, and we're going to be breaking down charts on chain and all kind of stuff. So big love to everybody. Hope you all have a wonderful day. Drop your questions, comments down below if you have anything. We will be in contact with this gentleman, and we will send him a smoke signal anytime we got a really good question. We can ask him directly. So everybody, have a wonderful day. And again, thank you for being here. Thank you for being a part of this community, and thank you for helping this world step into the future. You being a part of it helps this community to grow. So that's all I got. I love y'all. Adios, muchachos.